If you're looking for income and you're comfortable with hybrids, you may want to consider funds with preferred securities. As Kara Esser of Morningstar points out, they're an unusual type of asset with qualities of both stocks and bonds.
Preferred shares are a hybrid security, so the individual share is bond-like in its coupon payment. It has generally a stated coupon payment. Maybe it's in perpetuity, maybe there's a maturity date like a bond. It's equity-like in oftentimes there's equity participation in the underlying shares of the firm.
Past performance is no guarantee of future results, but in 2012, closed-end funds with preferreds generally had a good year.
In 2012, we saw a lot of closed-end funds that invest in preferred shares did pretty well. The overall preferred share market shrank in the number of issuances versus new issuances versus redemptions, but this didn't really hurt the closed-end funds that were holding these shares because people are so interested in income that they're just buying these things up, and it really just helped to push the net asset values of all of these closed-end funds a little bit higher this year, in addition to the coupon payments that they're receiving as well.
Preferreds also present various types of risk that investors need to keep in mind.
There is a big risk with preferred shares. They're often issued by highly leveraged companies like utilities or financials. You also have to be concerned about, in the case of default, they are senior to common shares, but they're also junior to all of the debt. So you may or may not get any money back if the company goes into default. And you also have to be concerned with the credit quality because some of them are investment grade and some of them are junk.
Before investing in funds with preferreds, Esser says be sure to check the fund's use of leverage and the credit quality of the preferreds.
And I also believe that investors need to be concerned with the callableness, the callable of a security, because if a fund has a lot of preferred shares that can be called, they have to reinvest that into either newly issued preferred shares, which likely will have coupons that are much lower, or they have to buy in the secondary market at elevated prices that are, at this point, are basically too high. I think that preferred shares are a great investment option for a lot of investors that are looking for income, but they have to understand the risks because they're not a fixed income investment. They have an equity risk in addition to that income component.
A look at preferred shares with analyst Kara Esser of Morningstar. Now for data highlights. According to CEF Connect, looking at 15 funds in the taxable income preferreds category, the Naveen Preferred Income Opportunities Fund had the biggest discount at minus 5.06%. The fund had a distribution rate of 7.64%. On the flip side, we've got the Flaherty and Crumline Preferred Income Fund. This fund traded at a premium of 8.19%, distribution rate 7.30%. Thanks for watching. This is Closed End Fund News.